In this video, I'm going to talk about how I analyze price movement and how I use the confluence of two timeframes to confirm my entry points in a trade. Watch this video to the end and see how this way of evaluating price movement can have a positive impact on your trading. The price moves in waves most of the time, with the exception of moments of volatility when the price accelerates with urgency and only makes the return wave after the period of urgency is over. Let's understand this movement in waves and how to use the confluence of timeframes to better understand the price movement. Let's analyze and understand the movement of a 5-embered chart by analyzing the way the price has combined on the 1M chart. By analyzing the smaller time frame, we can draw some conclusions about what the price might be signaling, whether the movement will continue to be bullish or bearish. As in this example, we have a 5-minute chart, and depending on how the price moves in the 1 minute, we can draw a different conclusion. Take a look. In this first example, we have a movement that gives us a higher probability of the price continuing to rise. In this other example, price is moving in the opposite direction, as the time frame is shorter. For this reason, it is extremely important when trading to use the confluence of at least two time frames to confirm the price movement. I particularly like to use the following confluences: 5-minute chart with the 1-minute chart, 15-minute chart with 3-minute chart, and for a more macro analysis, the 120-minute chart with the 30-minute chart. The important thing for this analysis is to have at least 5 bars in the smaller time frame so that you can understand what the price might be signaling. Of course, it's worth remembering that everything in the market is a matter of probability. We can't be 100% sure of anything, just a statistical probability. It was this reading of price movements that changed the way I trade, and it was from this conception of price action that my results began to arrive. I've been trading for 11 years, and for 10 years I've been studying price action from the point of view of Al Brooks and other writers on price reading, such as Richard Wyckoff. Let's open a replay of the August 30th, 2024 New York session. I want to highlight two things in this analysis. 1. Confluence of two timeframes to understand the price movement. 2. The price retracement points, because as we know, the price moves in waves, and generally, the point of return or retracement of the movement is close to the region of 50% of the previous movement. Let's take a look at the replay. Right from that first bar, we already have a clear sign of buying strength, which is confirmed by the two timeframes. In this second bar, we clearly have a sign of weakness in the upward movement. But the main point of this movement is the lack of interest in continuing the upward movement. As we can see, after bars 6 and 7 tried to continue the upward movement, we had a denial of this continuation in bar 8. Then bar 9 tried to resume the upward movement, but closed below the last bullish bar. Bar 10 tried to fall again, failed, but we again had a denial of continuity of the rise by bar 11, which already gives us a great sign of the buying force, making the price return to the region of 50% of the initial movement of the first 5-minute bar. As we are still working above 50% after the close of this third bar on the 5-minute chart, we have to wait for confirmation that the price intends to resume the upward movement. Bar 14 showed an entry of buying strength, but then we had an attempt by the sellers to make the price take the fall. But as this bar failed to even break the low of bar 14, this already shows us a weakness of the sellers in this movement. This weakness is confirmed by bar 16. This bar activates a buy on its breakout by reading the price action bar by bar. Fifth bar of the day, on the 5-minute chart, rejects the breakout of the previous high. On the 1-minute chart, we can see that after the breakout of bar 20, we had 21, 22, and 23 falling. Then a new buying force pushes bars 24 and 25 upwards. In this movement, I mark the Fibonacci again to see if the price respects the 50% region. But now I want to assess whether the selling force will prevail respecting the 50%, the downward movement that denied the breakout of the previous top. As we can see, bar 26 has already opened closing above 50%, signaling that the buying force prevails as the main price force for these first 6 bars of the 5-minute period. Here, I'd like to point out two things. The first is that we can see the importance of reading the price from the confluence of the two time frames. If we only look at the 5-minute chart, we can see that the price is bullish until this movement, but if we evaluate this movement from the microscopic perspective of the 1-minute chart, we can see the price movements more clearly. The second point I'd like to emphasize is that this reading allows us to work with a smaller stop loss in our trades. Because when we have confirmation of the movement on the smaller chart, we are able to adjust our stop loss to the optimum of the micro movement, and thus look for trades with less exposure to risk. This becomes even more fundamental if you trade in prop firms, as we know that in these financing companies we have strict rules that force us to be more cautious with our stops. We've concluded this study of price movement here, ending this backtest at bar 8 of the 5-minute chart and bar 40 of the 1-minute chart. With a clear perception of how it is possible to microscopically use the micro movement in confluence with the larger time frame to assess price movement. Before I finish this video, I'm just going to change the larger chart to 15 minutes and the smaller chart to 3, and we'll see what signals this confluence shows us. Leave your thoughts on this approach to price analysis in the comments. I hope this video has added something to your way of analyzing the market, and I'm happy to talk more about this price reading in the comment. Subscribe to the channel, and I'll soon be covering the entry triggers I use to open a trade, and how I use the smart money concept to further validate these entry points. Thanks for watching, and see you in the next video.